You can borrow crypto coins or tokens by way of a loan, but you may be wondering, why on earth would you want to take out a crypto loan? That is, borrow some Bitcoin or Ethereum perhaps, and actually pay interest for the privilege. Well, stay with me and I'll give you 3 compelling reasons as to the why, and then I'll show you simply how to do it step by step. So let's illustrate the basic concept of taking a loan. If you approach your local bank and ask for, say, $250,000 for instance as a loan, there's no doubt they will do some credit checks on you, and if you pass, they will ask for something called collateral. That is security for the bank in case you default on the loan repayments. So simply put, that is not paying back the bank when you are supposed to. So for example, if you provided your house as collateral for this $250,000 loan and you defaulted on the loan, the bank could effectively repossess your house. Now, I think you appreciate the mechanics and reasoning behind a traditional loan, but a crypto loan? Before I get into the meat of this video, I want to let you know that this video is kindly sponsored by Matrixport, who help make crypto products simple to understand and easy to access. So here are perhaps 3 compelling reasons as to why you may want to take a crypto loan. Number 1, it is very quick and easy to do, and there are no credit checks on you, unlike a traditional loan. Number 2, if you frequently trade crypto, by borrowing more crypto, you could leverage your position. That is, have more crypto to trade with without having to sell your existing crypto. And number 3, you genuinely need the loan for personal reasons. I mean, why not? Like to redecorate your house, if you like. However, these are probably not the only 3 reasons as to why. So I'd be interested to hear in the comments below why you think a crypto loan would be useful, or not, as the case may be. So we've covered the why and now onto the how. It really is quite simple and above all very quick indeed. Using Matrixport, I managed to borrow some crypto within just 10 minutes. Once signed up and logged in, I navigated to the loan dropdown and duly selected this. I want to borrow 2 ETH, that is Ethereum, which in the current market is worth around $2,000 per Ethereum. And I want this for a term of 60 days, selected here under the tenure. So once the 60 days is up, I will have to repay the entire 2 Ethereum principal amount I am borrowing, plus interest. But here's the key, as with any crypto loan, is that you have to provide collateral. That is security to cover the risk that you don't or are unable to repay the loan and interest back. So I'm putting down some Bitcoin I hold as security. And the key here is this LTV figure, known as loan to value. It states 50%. So if the 2 Ethereum I am borrowing is worth approximately $4,000 in total, then I must put down Bitcoin of 0.25628. Currently worth $8,000. So in other words, twice as much. Now you can see the Bitcoin to Ethereum ratio is 50%, i.e. this is the loan to value. The interest rate is 7.4825% as shown here by the APR. That is the annual percentage rate. And the interest is actually paid in Ethereum too, so that works out to be around another 0.246 Ethereum on top of the 2 Ethereum principal I have to pay back. But why would you want to lock down your Bitcoin as security just to borrow some Ethereum? Well, it's not just Ethereum that you can borrow. You can borrow stablecoins, which are pegged to the US dollar, but in any instance you are going to need to put down some collateral if you like to borrow. Speaking of likes, if you feel you're getting value from this video, then please lend me a like and I'll keep on producing more videos just like these. So now before I press the button and lock myself into this arrangement, I need to be sure I understand the details. The first 6 items on this loan summary I've pretty much covered. There's no platform fee either. Nice one, Matrixport. But here's the stuff you really need to understand. That is the soft margin call and liquidation price. And it all sounds like something a professional trader would shout out in a dealing room. But let me explain what this means. The reference indicates I need to keep the loan to value ratio at 60% or below. If the LTV, that is the loan to value during the 60-day loan term, increases to 60% or more, then I have to make a soft margin call. In other words, I have to top up my collateral of Bitcoin to maintain an LTV ratio below 60%. But why and how would this LTV ratio actually move? Quite simple. During the 60 days, if the price of Ethereum I have borrowed increases, then the LTV moves. Conversely, if the price falls, it goes the other way, and the same if the price of my Bitcoin moves. I think you get the picture. If I don't make a soft margin call and the LTV increases to 75% or beyond, then my loan is liquidated. In other words, the lender will close the loan contract and I get to keep the 2 Ethereum for good, and the lender gets to keep my Bitcoin, which is worth more relative to the Ethereum, so the lender gets a pretty good deal out of it. If I have sufficient Bitcoin in my Matrixport account, then I can auto pledge collateral. That is, Matrixport will automatically top up the collateral for the loan loan should a soft margin call be needed without the need for me to continuously check in. And here's another thought you need to consider. If you took a crypto loan just like I did, then is there a tax consequence? I mean, the last thing you want is an unexpected tax liability, which is why this video will help you understand the tax consideration when it comes to crypto.